Ladies and gentlemen, I'm back. I'm live here in the flesh. First live of 2024. Happy New Year to everybody that's out there. Tag on in, just jumping on this live. I'm long overdue. Haven't been putting out the live. But the first thing I want to say, thank y'all for everybody who subscribed and pushed us over 50,000 subscribers. We finally made over 50,000 subscribers. Today I'm just going to be going live from my office, not my studio. But if you haven't done so already, please go ahead and make sure.
Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button.
Once again, ladies and gentlemen, boys and girls, and children, all ages, you're now tuned into the Investing Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. If you haven't done so already, hit that like, subscribe, comment, and share button. Tell your friends, your cousin, all the other great stuff. So, guys, I've been underground working so much these last couple months, last couple weeks, and like I posted up, if you don't know, I'm finishing up my fourth book in my children's financial literacy series titled Wesley Learns. Wesley Learns about real estate. I have my own registered investment advisory here, my own firm, doing that, dealing with clients every day. So building everything from scratch, from zero, retiring from the Navy. It's been a lot. I've been moving around. I've been keeping busy, being on other podcasts, so it's been pretty busy. But still, I had this episode on my mind about what are we going to do with Bitcoin. Everybody got excited about the Bitcoin spot ETF. It got approved. People said, Prince, what does that mean? What are we going to do? Let's take a look at it. All of the good stuff like that. Hey, Bitcoin is back. I told you all this good stuff. So if you haven't known, if you've been on the rock, you're not familiar with it, the SEC approved the Bitcoin spot ETF. The first question you should ask yourself if you're not familiar, what and why do we have an SEC? So the reason why we have an SEC, if you're not familiar with the stock market crash, the Great Depression that happened in 1929, this happened followed by the Roaring 20s. So before that, we had the Roaring 20s. The Roaring 20s led us into the Great Depression, meaning that people was buying stocks, people was making money buying stocks. This is when we got introduced into credit. A bunch of credit started getting pushed into the market where you can buy stuff with margins. So people was buying stuff that they had no business buying. And when the market took a downturn, people lost more than what they ever had when those things got called away. So this is why we had the SEC. We kind of got a watchdog to look over this market, tell us what happened. So people lost a lot of trust into the financial system. People lost trust into the financial system. People didn't like the financial system. People had all type of issues. So we had to get a watchdog. Hey, how can we stop this from happening? So in 1933, 1934, all these regulations came about to say, hey, let's look into this whole market thing. When you read this book called The Greatest Trade Ever, it's on my bookshelf here. It should be around here somewhere. It might be up here. Yeah, here you go. Jesse Livermore, The Greatest Trade Ever. Right, you take a look at this book here. The World Greatest Stock Trader, Jesse Livermore, right? And he made a bunch of money back in right after the turn of the 19th century. The reason why, back then, the market was very unregulated. You can do what you want, say what you want, post what you want to post, have all type of fake numbers and whatever. It was the wild, wild west. You talking about these dark pools and insider trading, you think it's bad now? Back in the day when there was really no news, when they controlled the newspaper, they controlled everything that came out. It was so many black market things that was out there. It was crazy. So this is before the market became very regulated, that people made a lot of money. Let me see here. I don't know your name. You said good evening on a spot live. What's going on? Good evening to you as well. So that's why we have the SEC. The SEC is the watchdog. They're the ones to make sure. I'm registered with the SEC. You can go to brokercheck.com and type in Prince Dykes. My license numbers pop up, the firm I work for, everything about me, my address, my phone number, how much money I manage, all this other good stuff. This is all the things that happen out there, right? So when you look at these things, that's what the SEC is. Now you must register with the SEC. The SEC is a bunch of lawyers that kind of make sure we're doing what we're supposed to do. Now, with that being said, this is why the SEC has to approve what's on the market. because people put a lot of bull crap out. I mean, it was before the SEC in the 20s, it was the Wild Wild West. That's what led us into the Great Depression. So the SEC comes along to be the watchdog to make sure, hey, they can stop trading, they can delist something, they can list something, all this type of stuff. This is why these things have to get into the SEC. And by getting to the SEC, it's a big deal. You know, I'm a state-regulated registered investment advisor, right? Meaning I manage under 100 million. I have to give up my phone number, accounts, bank accounts, where money is, my licenses, registration. I can get audited at any time. They could shut me down at any time. They could tell me no. They could subpoena me. They could send me to jail. All type of things they could do, right? And the reason why is that's written in blood because there was people that did bad things in the past, whether they did it intentionally or unintentionally, right? So that's why we had the SEC. That's why they had to overlook these things. What's going on? That's my guy right there, Alan Williams. What's going on, Al? Al, you know, I'm going to give you a shout after this live too. So here we go, ladies and gentlemen. Let's take a look at this. This is the spot ETF that everybody's talking about. Let me see. Y'all give me 1 second. So we're gonna go through this thing together. I wanted to look up. No, it's one that I was using before. No, that's not it. It's not coming the way I wanted to come up, but hey, we're gonna make it work. We're gonna make it work. So let's take a look here, ladies and gentlemen. This is on the SEC.gov. This came out January 11th. January 11th, the statement approval of this is a statement of approval of a spot Bitcoin ETF traded product, and we're going to talk about what these things are. Today, the commission approved the listing of trading a number of spot Bitcoin exchange traded products, ETPs. I have often said the commission acts within the law and how the courts interpret the law, beginning under Chairman Jay Clayton in 2018 and through March 2023. The commission disapproved more than 20 exchange rule filings of Bitcoin ETPs. So that's a big thing. They disapproved over 20 filings ETPs. Now, did they tell why they disapproved? They didn't tell why they disapproved, but you know, and they're going to get into this later on in the letter too. So they disapproved over 20 ETPs, right? One of those filings made by Grayscale contemplated the conversation of the Grayscale Bitcoin Trust into an ETP. So Grayscale Bitcoin Trust wanted to turn into an ETP. We're now faced with a new set of filings, right? We're now faced with a new set of filings similar to those we have disapproved in the past. Circumstances, however, have changed. The U.S. Court of Appeals of the District of Columbia held the commission failed to adequately explain the reason of disapproving the listings and trading of Grayscale proposed ETP, the Grayscale order. So they said, hey, you just can't disapprove us and tell us why you disapproved us. So the U.S. Court of Appeals said, hey, you got to let them know, because sometimes you apply for a job, right? They send you an email saying, hey, because of your qualifications, we decided to go with someone else. They don't really owe you an explanation. So Grayscale said, well, hey, you didn't tell us why you disapproved this. The court therefore vacated the Grayscale order and reprimanded the order by the commission. Based on these circumstances and these discussions more fully in the approval order, based on these circumstances and those discussed more fully in the approval order, I feel the most substantial path forward is to approve the listing and trading of these spot ETP shares. So the U.S. Court of Appeals came back to the commission and said, hey, you disapproved these people. You got to tell them why. And then when they looked at it, they said, hey, you know what? I think we should go ahead and approve them. So it said the commission evaluates any ruling filed by the National Securities Exchange based upon whether it's consistent with the Exchange Act and regulatory laws thereunder, including whether it's designed to protect the investors and the public interest. You want to protect investors and you want to protect the public interest is what they're saying. The commission is merit neutral, does not take a view on a particular company, an investment, or assets underlying the ETP. If the issuer of the security and the listing exchange complies with the Security Exchange and the Security Act and the Exchange Act and the commission rules, the issuer must provide the same access to regulate the market as anyone else. So they said, hey, even though we may not like Bitcoin and we may not do this or whatever, but they say, hey, if they're following by the rules, they should be allowed to be traded like everybody else, essentially. Importantly, here it is. Importantly, today's Commission Act and cabin in the ETP holding of non-security commodities, Bitcoin, it should in no way, here we go. I want y'all to pay attention to this. It should in no way signal the Commission willingness to approve listing standards for cryptocurrency assets, nor does this approval signal anything about the Commission views as to the status of other crypto assets under the federal security laws or about the current state of non-compliance of certain cryptocurrency assets, in particular with the federal security laws. As I've said in the past, and without prejudging any cryptocurrency assets, the vast majority of cryptocurrency assets, investment contracts, thus subject to the federal law of securities. Pretty much that's a fancy way of saying, hey, by us approving this thing, we're not saying it's good. We're not saying you should do anything with it. We're just simply allowing it to be on the market if it meets the rules. Investors today can be ready to buy and sell or otherwise gain exposure to Bitcoin at a number of broker houses through mutual funds or national security exchanges through peer-to-peer payment apps or non-compliant crypto trading platforms, and of course through the Grayscale Bitcoin Trust. Today's action would include certain protections for investors. First, sponsors, we're going to get into these sponsors of the Bitcoin ETP will require full and faithful disclosure about the products, investors, and Bitcoin's ETFs and benefits, right? So, ladies and gentlemen, this is a fancy way of them saying, hey, we're going to prove this thing to be traded, right? They disapproved 20. Now you got to ask yourself this question, ladies and gentlemen. Here's a deep question. Why does Wall Street want in? Oliver Velez, shout out to Oliver Velez, he made a very valid point. He said Wall Street, Bitcoin doesn't need Wall Street. It has shown it doesn't need Wall Street. It's done very well without Wall Street. Why does Wall Street want in, ladies and gentlemen? Wall Street does not care. People are like, oh man, all the big players are getting involved. By the big players getting involved, it popularizes something, right? See, the reason why Wall Street wants in, because they're going to collect the fee for managing this entire ETF. That's why they want in. They're not in because, hey, Bitcoin is a great product. They're like, hey, you know what? We can create an ETP, and all it's going to do, imagine something like this. I create a product that mimics how many elephants are being born, right? Elephants will be born. Oh, you know what? I can create a product that tracks Warren Buffett's performance. I just mirror Warren Buffett, right? Buffett buys Apple, I buy Apple. Buffett sells Apple, I sell Apple. Buffett does this, I sit by and try to mimic what he's doing. I'm not invested into Warren Buffett. I'm just mimicking what he's doing. So with the whole entire market, people are like, hey, there are financial services and fund managers. They don't care about the underlying asset. They see it's a big demand for it. So they want to create a product to service that demand. And then what they're going to do is they're going to collect the fee for doing it. So your Fidelities, your Greystones, everybody that's jumped into it or whatever, they're not saying, hey, we're going to put our money here, whatever. They're giving more people access to get exposure to the fluctuation of Bitcoin. Now you got to go deeper. Prince, this ETP, what is this thing? They approve these ETPs. What are these things? Let's look into what is an ETP. Did I put it on here? No, I did not. Here you go. What is an ETP? So here we go. So that's why Wall Street wants in. They see a problem and they're going to say, hey, you know what? It's people online all day talking about this Bitcoin and they want to put all this money to it. You know me, I have clients. Clients call me all the time. Hey, Prince, how can I get involved with Bitcoin? How much does it cost? How can I get involved? Everybody wants in. Why does everybody want in? Do they want in because it's great? No, Wall Street wants in because they can make money off of the fees of managing these ETPs. They're like, hey, go ahead and get inside. We don't care. Get inside of these things, right? So let's go and look at what is the ETP. Here we go. An ETP is an exchange traded product. What is an exchange traded? We're going to shout out to Investopedia. Always got the best knowledge that's out there. So exchange traded products, this is the definition. An exchange traded product are instruments that track the underlying security and index or other financial products. ETPs trade on exchange similar to stocks, meaning shares can be purchased, prices can fluctuate throughout the day trading. ETP share prices are derived from the underlying investments they track. So that's what an ETP is. All it's going to do is going to sit beside and watch what Bitcoin does. Bitcoin goes up, this goes up. Bitcoin goes down, this goes down. And it trades like a stock, much like an ETF. So this is what this product is doing, is mirroring the performance of Bitcoin. And it's giving people to have exposure inside of their people who have retail accounts. Because before, in order to get Bitcoin, you had to be on Coinbase and crypto.com and whatever, right? Now, more people can get more exposure to it. Now, the deeper thing about these ETPs is I didn't see the ETPs say they're going to purchase Bitcoin. They said they're simply going to track. Ladies and gentlemen, what does it say? They're going to track the underlying security. It didn't say they was going to purchase the underlying security. So people are like, oh my God, everybody's going to dump all this money into Bitcoin. It's like, well, an ETF or ETP only tracks the performance of it, right? I didn't see anything where they say, hey, we're going to purchase a bunch of Bitcoin. They're only going to, mirror what this is doing. So if you own a Fidelity or E-Trade or whatever account, you can now go out and purchase FBTC Fidelity Bitcoin ETF that's going to track Bitcoin, and guess what? Fidelity is going to collect a fee. All these companies are looking at it because they're like, they don't care. It's like, hey, if you want to buy into this fund, it becomes popularized. Look at Vanguard ETF that tracks the S&P 500. It's $1 trillion industry, the ETF market. It's $1 trillion industry. Imagine if you get 0.5% or 0.3%, and all you got to do is just sit back and track the performance of the underlying asset. So that's what an ETP does. It's like, hey, we're going to create a product. Fidelity and all these other players, sponsors, Wall Street is going to create a product that's going to track the performance of Bitcoin, and they're going to collect a fee for doing it. Now, are they doing this because they believe Bitcoin is blah, 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 or are they doing this just to collect that fee? Who knows? But I'm just saying it's money to be made. And where there's money to be made, you will always find Wall Street, ladies and gentlemen. Let's see what y'all are saying here. Freddie B, what's going on, Freddie B out there in Lancaster? What's going on? He says, Happy New Year. Happy New Year to you as well, Freddie B. Thank you, man, for the support. This is my first live of 2024. I'm here, and thank you, guys. I very appreciate all the support. So the exchange traded product says, hey, we're simply going to track the performance of this and give you exposure to this, right? Now, the best thing about this whole thing is it's going to popularize cryptocurrency and make it more of an asset class. That's the best thing I can see with it. AI has shown what it can do. I have ChatGPT. ChatGPT can write me a press release. ChatGPT can write a book for me. ChatGPT can write emails for me. ChatGPT show me what it can do. Bitcoin, all it has shown me it can do personally is make me some money, right? So are people buying the Bitcoin because they want to trade and buy things fast? But yeah. Freddie B said, make that money. Yes, because that's what people are doing. Wall Street is getting involved, and Grayscale is, and Fidelity, all these players are coming involved because they see it's money to be made. They're looking to solve a problem. People want to put this in their portfolio. This is the way we can solve this problem. On the Spot Live said, definitely agree. Crypto is moving from the brave early adopters to the regular folks. Exactly. See, now people who have money inside of a broker account, they can get exposure to this because back in the day, you had to get on Robinhood. Robinhood was like the first platform that made it accessible. You almost had to do a drug deal. You had to get on a certain app and you had to buy some on the low. Don't tell anybody, stuff like that, right? So now what Wall Street is doing is giving the access to people to track the performance. People are acting like, hey, Wall Street's about to dump $1 billion into Bitcoin. I haven't seen that. These ETFs mean that you're going to track the performance of Bitcoin, given that exposure. And why do they want to do that? Because it's money to be made. So they're going, we're going to collect a nice little management fee off of that, right? So let's take a look at one of them. Here, let's take this down. Let's take a look at one, right? And put this up. This is one of the 10 spot ETFs that were approved. Let me bring it in. Let me share this so you guys and girls can see. Let's take a look at the Fidelity one. Right, here we go. We're on Yahoo Finance. This is FBTC. This is Fidelity Wise Origin Bitcoin Fund. You started looking at this. It started trading last Thursday, right after it got approved. And it's not too much to say. Opened up at $40. Net assets, NA. Net NAV, NA, not a whole bunch of information on. I'm just looking on Yahoo Finance. I probably should go to Fidelity's, look at their perspective. I probably can get more information. But publicly known, look at this volume. Look at this volume, 14 million. Average volume is 14 million. How people rushed into it, right? It opened up at $40. Now it's at $38. This is all Fidelity cares about. $14 billion, 14 million people trading in or whatever. It's probably millions are going to grow to billions, and they collect a little fee off of it. I'm managing to track something, right? Now I go here to the profile, NA. You know, that's all it's pretty much having on there. But let me do a little deeper dive here. Let's go to Google, and we're going to go to FBTC, right? That's not the right price, right? Let's see. Oh, here we go. View the perspectives. Let's go back. I'm going to go to view the perspectives. The perspectives tell you everything about it, right? Now, this is a dry 112-page ETF. This is one of the spot ETFs that was approved, right? They got a forward-looking statement, all of the good stuff. Let's scroll through and see what we got here. What are they saying? So the Fidelity Wise Bitcoin Trust is an exchange-traded product that issues shares of beneficial interests that seek to list the trade of CBOE BZX exchange. The exchange, the trust investment objective is to seek and to track the performance of Bitcoin. See right here. It's an investment objective to track Bitcoin. Did it say it was going to buy Bitcoin? Did it say a bunch of money was going to be dumped into it? They're going to track the performance of Bitcoin as measured by the performance of the Fidelity Bitcoin Reference to Index, right? And the trust provides exposure to the value of Bitcoin. And the shares of the trust are valued on a daily basis using same methodology used to track the index. So right here, that's all it's going to do is track the performance of Bitcoin. You know, it's trying to tell you what Bitcoin is. This is the entire dry perspectives. This doesn't mean it's going to own it. It's going to put money into it. You know, it's just saying that, hey, if Bitcoin go up, this thing is going to go up. Bitcoin is going to go down. This thing is going to go down. So not everyday people, retail investors, like they like to call us, will have access to it, right? To this particular market. So now here are the benefits of this thing happening is with the SEC involved now you have access to the watchdogs. The watchdogs can now help and tell you what's going on, what can happen to the market, stuff like that, right? So the SEC is going to be over the back. All they're doing is you have you got this ETF, right? You got these spot ETFs managed by Fidelity and Goldman Sachs and whoever's in BlackRock or whatever. They're there. They're just a vehicle. They're creating a vehicle that everyday people can buy that's going to track the performance of Bitcoin. When people saw this, it's framed as, hey, Fidelity is going to dump a bunch of money into Bitcoin, right? That's not really the case. But by having the more value, it does commercialize it and it does legitimize it, right? For prime example, I've written children's books. I'm an independent author. I write my books starting here on my notepad that turns into my I type them up on my computer. I put them out myself, right? the more people that purchase it, organizations and institutions that get behind it, that sponsor me, that do things like that, that creates my brand awareness. Oh, wow. He's inside of Walmart. Must be good. It legitimizes me. Hey, he's on TV. Must be good. It legitimizes you, right? That's what starts to happen. So that's the things I want to pay attention to. I want you guys and girls to pay attention to. That's the best thing that I can see that's coming out of this with Bitcoin. Is it's going to be more commercially acceptable. Young kids already know what it is. Young kids want to get some or whatever. That's what you need. When you create an ETF, I can create an ETF. It costs about $1 million to create an ETF and launch an ETF. Good, you create an ETF. Now you got to get people to invest money into that ETF. So now you are here. Now they can get people to invest money into their ETFs. That's the best thing about it. And the SEC is the watchdog to look over these ETFs. So, that's a look there that we talked about. We talked about why Wall Street wants in. Why do we have the SEC? The ones that was approved and disapproved. And that's pretty much going to be it for tonight's episode. So, ladies and gentlemen, I hope y'all got something out of this. Thank y'all for being back. Y'all tune into the podcast, all of the good stuff. I'm going to get back live more often. But y'all know, I appreciate y'all for rocking with me. Y'all look out for my new book. I'm doing a launch here at the Broncos Boys and Girls Club, April 12th. Denver Broncos Boys and Girls Club with NFL Hall of Famer Terrell Davis. We partnered on this book here. And his kids are going to be in it. Of course, his Wesley Learns is going to be in it. And it's going to be a great book, the 4th book in the series, teaching kids about investing, credit, insurance, and real estate, and turning kids into first-time shareholders of stock. That's what we do. Thank y'all for tuning in. Hit that like, subscribe, comment, and share button. Drop some comments below. Share this video. Check out the podcast. Hold on. Let me see what y'all saying before we get out of here. On the Spot Live, he gives me a thumbs up. On the Spot Live, thank you for tuning in tonight. Check this out. This is going to be on Spotify, and check me out on Instagram, all of the good stuff. But peace, y'all. Be safe. I'm out, and thank you.